Hi, welcome to Algo. Today we are going to discuss a strategy which is a high frequency option writing strategy in Bank Nifty. So before starting, first thing first, a disclaimer that I am not a SEBI registered person, and all the contents discussed in this video is for educational purpose and for the purpose of learning and knowledge sharing. And or as we all know that trading is a high risk business, and hence I suggest that you should take advice from a person whom you feel that can advise you best for your financial investment. So let's get started. Uh, so what is high frequency trading basically? See, the definition of high frequency trading in respect to forex trading or trading outside India is like there will be thousands of trades happening within a fraction of seconds, but that concept is not there in India for high frequency trading. What I mean here from high frequency trading is that we'll be doing relatively more number of trades in short span of time, say intraday. So that is the context of pronouncing it as a high frequency trading in Indian context. Okay. So let's go to the strategy. See, as you all know that the simple things work best in intraday trading or any kind of investment, and for that matter in any sphere of the life. The simplicity works the best and gives the best result. So this strategy is very simple. It's a basically option writing strategy in Bank Nifty. So what we will do here, we will sell Bank Nifty straddle at 9:20 a.m. And for selecting the ATM strikes, we will use the spot prices. Sometimes there is a gap between the spot and the futures price, and that is the reason that the ATM's strike can be different. Once the straddle is sold, we are not going to keep any stop loss or target for the individual legs. We will allow the strategy to run with both the legs, call option and put option as well. Universal exit, that is if the strategy profit goes to 700, we exit the trade, exit the both the legs, or if the loss goes to 600, then also we exit the legs. Once the exit happens, we have to take re-entry after 2 minutes. So this process goes on again and again during the day, right? So let me just take through to the back testing of this strategy on tradetron. I have used tradetron platform for back testing the strategy. You can also back test on uh, stock but I think stock has a limitation of reactivation after one exit happens. So I'm not very sure about stock but yes, we can test in tradetron. I have done the coding and backtesting of this strategy. So let me take you to the backtest results of the strategy. So this is the backtesting results of the strategy for the period from March 2021 to February 2022. That is one complete year. As we all know that the margin requirement for Bank Nifty one straddle is around 175 180k, and this is the result. We will analyze the result in Excel sheet. You could see here that the number of trades are more, in March 2021 it is showing as 1180 trades. इसी तरह से February 2022 it is showing as 1032 trades. But we should not get worried about this high number of trades, because the how tradetron depicts the number of trades in its backtesting is something different, which may sometimes be confusing. So we will discuss that on Excel sheet and explain how things are. So what I have done is I have taken these results into an Excel sheet. So let me open that Excel sheet. So same whatever results you just saw, this one I have populated into the Excel sheet. So this is the month, number of trades, PNL and PNL percentage. This portion is same as you can see in the backtest report. The further columns I have added for analysis and explanation. Okay, so let us go to the number of counters. Now, as I told you that the number of trades sometimes is confusing in tradetron backtesting. Like if you see in my strategy, there will be a call option leg, there will be a put option leg, right? So for one trade, we have to sell 1 CE, 1 PE, and to close the trade, we have to buy 1 CE, 1 PE. So these are the 4 orders or 4 trades got executed to complete the one counter or one trade. So 4 trades forms one counter or one complete trade as per tradetron. So like if it is mentioned as 1180 trades, it means if you divide this by 4, you will get 295. So basically we have completed 295 counters in this month, right? It is not 1180 counters. The number of trades for you is only 295. Executed trades, like one counter has 4 legs, so 295 into 4 is 1180. That is how tradetron calculates this. So these are the number of counters, 295 like this. Now if you see the counter per day, if we divide this, I have taken 20 days as trading days in a month. So if we divide this by 20, we will get all these numbers. So counter per day is this. So you can see in some months like March 2021 and February 2022, the number of counters are high, like 13 and 15. Like 15 trades will happen, 15 times the entry and exit will happen in a day, which looks a little high for a normal strategy. But since we are calling this as a high frequency strategy, that is what I meant here by high frequency strategy, that number of trades will be more, the number of entries and exits will be more. Now if we try to find out how much will be the expenses, इसमें expenses कितना होगा, because number of trades are higher, तो expenses का calculation important बन जाता है इसमें. तो इसमें I have taken Finvesia calculator for calculating the expenses, and considering around 250, around 300 rupees as a premium, average premium throughout the week. It will be more on Friday, it will be least on Thursday, but I have taken as 300 as the premium for a call leg or a put leg to calculate the expenses, and it comes to around 8 rupees per trade of tradetron, like 1 CE by 8 rupees, 1 CE sell 8 rupees, 1 PE by 8 rupees, 1 PE sell 8 rupees. So to complete one counter, you will be spending around 32 rupees with zero brokerage. That is most important. This strategy will not work on brokers where you have to pay brokerage or high brokerage as high as 20 rupees per lot or 20 rupees per order. So this is the caveat here, that we have to use this strategy only on zero brokerage accounts. So we have Finvesia, we have Kotak, maybe I don't know, maybe some other broker also may be there. So with this, these are the expenses per month which comes. So this will go from the profit. So net profit after expenses will be this much. Now if you see the next column, I have done a downward adjustment because we are booking very small profit and loss in this strategy at the strategy universal exit level. So there are chances of slippage, like if your target is, say suppose 700, and tradetron or sends the order to exit the trade at 700, it may so happen that you may get only 550 rupees. 150 may go into slippage or time lapse, because as soon as the target of 700 is reached, tradetron will send the order. But till the time the order executes and completes, the rate would have changed and your net profit could be 550. Similarly, if the stop loss is 600, you may get a stop loss of 800 also sometime. Sometimes you may get stop loss of 400 also. That will be a positive slippage for you. Similarly, we can get sometimes 800 rupees instead of 700 rupees as a profit also. But I have taken the worst condition that there will be a downside of 25% because number of trades are high. So I have from the net profit I have deducted further 25% to arrive at the net profit after adjusting this slippage and execution inefficiencies. So these are the profits after adjustment of expenses and further adjustment of 25% to arrive at this much profit. So this is 2,62,722 in 1 year, which comes out to be around 12% per month on investment of 1,75,000, which is quite high, right? So now since this strategy has got so many trades, there is always an effort to reduce the number of trade without compromising too much of the profit in terms of percentage. So what I have done, I have applied a filter to filter out the trades, to reduce the trades. What changes I have done is that I have applied a RSI filter on Bank Nifty, that because when the Bank Nifty is trending upside or downside, that is the period where this strategy will have the multiple stop losses. So we have to see that when trend is little bit settled or the market has gone into sideways, so that is where the RSI will not be trending. Because if market is going up in one direction, the RSI will move higher above 60, 70, even sometime 80. And when the market is in downside and trend is strong, then the RSI will even go below 30 and 25 also. So what I have done is I have put a condition that the RSI should be between 40 and 60 for the entry to happen. So if that filter is applied, I have got the result of backtesting as well. One second. So this is with filter. You can see the number of trades have come down. Here you have to ignore this blip which is showing in September. Okay, because if you remember, there was a issue in one strike of a freak trade in September, wherein the entry was around 321 and then exit happened at 1921 due to a freak trade. So in this backtest also, unfortunately, that particular strike is coming, and in that one single strike the loss is 40,000 it is showing. So I have excluded that loss. So if you see here, the September loss is showing around 19,000, but 40,000 loss has come in that single trade of freak rate spike. So I have added 40,000 rupees in this. So I have taken as 22,000 profit in September instead of 19,000 loss in September because of that freak trade. So let us go to Excel to understand how this works out on Excel. So this is with filter. So see, you can see the number of trades have drastically come down from 1,200 to around 800 and all. So if you see the number of trades reduction is around 27%. So there is 27% reduction in the number of trades. Okay, and this is the PNL. Of course, PNL has taken a hit, but not very big. Now PNL percentage, this is same as we have taken from the backtest report. Number of counters, same calculation, divided by 4 counters per day, divided by 20, considering the 20 days in a trading month. Expenses also same 8 rupees I have taken per executed order. for one lot, and then net profit uh, after expenses. Now I have taken here, instead of 25% downside adjustment, I have taken 18%. Why so? Because the slippage is directly proportional to the number of trades. Now our number of trades is 27% less. So I had taken 25% as the downside. So I have to reduce this 27%. So I will take 0.73 times of this 25% as downside. So it comes around 18% I have taken here. Is coming 19%, but I have taken 18%. So we have to adjust this 18%, and this is the final P&L after adjusting the expenses and further adjustment of 18%. So this is the final result. Still, it is coming as 10% per month return from this strategy, which is again quite high. Even if we get 5-6% and get it consistently, it is more than enough. Okay, so you can try this strategy. Don't straight away go on to the live auto. You can do it paper trading. You can code it. It's very simple. If somebody needs help who is new to the tradetron, I can help. He can contact me on the WhatsApp or into the on Telegram. I will help coding as well. Also, I'm including the link of the strategy in my description of this video, and you can directly deploy those strategies. They will be free of cost for now and maybe forever. So you can deploy them, paper trade for some time, and then see the results for yourself. And if you are able to code, it's very simple. One should be able to code. Then you can try different variations as well. You can use your own filter. Maybe I used RSI filter. You can use your own filter. Maybe you can increase time between the trades, the reactivation time from 5 minutes to 10 minutes or 15 minutes, depending upon your risk profile. And as you see the trading for you works well, so you can accordingly play with the settings, apply different filter, apply different reactivation time. Even you can try with different stop loss and targets as well. We never know what works best. This is what I have tried and I found it useful, so I thought of sharing it. Right. So we go back to our presentation. So this is done. Filters I have explained to reduce the number of trades and hence the expenses and slippage. I have done this filter. And increase re-entry time to 5 minutes. I have increased the entry time from 2 minutes to 5 minutes as well. Now, what is the upside and downside of this strategy? Basically, upside is, as you can see, the profitability looks good on paper at least, or in paper trade, or in backtest. We have to see in live auto environment. Okay, things could be different, but they will not be very bad because the strategy is showing huge profit like 10-15% or even 20% if you exclude the 25% or 18% downward adjustment. So if it is showing 18-20% on crude basis, then maybe on live auto environment definitely we will get 8-9-10% kind of return. Other upside is the less loss per counter or per trade. This is very important for the new traders basically, because initially the our sight is very limited basically. We see the current positions. It should not have much loss. We are not able to take a longer view call initially when we start trading. So this helps that your per counter or per trade loss is less, that is 600-700 rupees. And logic is simple as explained. You simple sell the straddle and manage that as we discussed. Downside is of course high number of trades, though we can limit the trades by filters. Because of high trades, the chances of higher slippage and higher expenses. Second drawback or downside is in a strong up move or down move, the continuous losing trades can be up to 8 to 10. Okay, you may lose on a high trend days 8 trades to 10 trades continuously. So basically 5 to 6,000 rupees loss continuously it may happen. But if you see the backtest report, you will see that drawdown is only 1.78%. So that means if even if there are 7 8 continuous losing trade in a given day, it has recovered that loss. Otherwise it would have reflected in the drawdown. Drawdown is on closing basis, not intraday basis. Okay, so it would have reflected in the drawdown. It is not reflecting, so that means the strategy is recovering even after making the continuous losses as well. So I think that is it on this strategy. What I plan to do, or you also can do in your own tradetron login, that you can create a variation of this strategy for Nifty and a combination of Nifty and Bank Nifty as well. I will do that in a couple of days and post the video for that as well along with the code. So and in future also going forward we'll be discussing different kind of strategies here like directional, non-directional and other kind of strategies which I am using and which other creators also are using on tradetron. Okay, so you can what you can do is you can copy the copy the strategy. I'll give you the link. You can contact me on the WhatsApp or Telegram and like the video and subscribe it, so that I will be posting the videos continuously now. And basically it is not something that I know and people don't know. It is basically an interaction. I am sharing my knowledge, and if somebody has better ideas he can share with me. We can code that together and create some good strategies on tradetron, and so that everybody can benefit, right? So that's it for now. I'll be back with another video of variation of this strategy in couple of days, maybe one day or 2 day. Thank you for watching.